Guys, Jody Kennedy here with Century 21 Judge Fight,
And Scotty Levitt with Integrity Mortgage.
and we are in the Christmas spirit, the 2020 spirit. It's not Thanksgiving yet, but they don't sell anything else besides Christmas.
I was going to say, and everybody's just ready for Christmas at this point. So,
yeah, and
I mean, people have their lights up already at this point, so we might as well just get into the Christmas spirit. So
totally. So today we are going to talk about refinance. So I have some questions for you, Scotty.
Perfect.
So I want to do a guest bathroom remodel.
Okay.
But I would like to refinance and take the cash out of my equity to use that to do a remodel. Can you tell me when is that a good idea and when can that actually hinder a person?
So when I sit down with people and we're looking at what their current house situation is versus what they're wanting to accomplish, being pulling the cash out to do these remodels, we take a look at how much equity they currently have in their home, plus what their current mortgage payment and their current mortgage terms are, and say, okay, if you want to pull out $30,000 for this renovation, what is that going to do to your monthly payment? Is that going to potentially push you into a new loan to value scenario that's going to cause, where you can't pull out the money because now you're going to exceed 80% loan to value? Because once on a cash out, you are not allowed to go over 80%. You always have to maintain 20% equity in your home on a cash out refinance. That is different from a standard refinance, because a standard refinance, you can refinance above 80%. But on a cash out, we always want to make sure you're maintaining your 20% equity in your home. So in your question about the bathroom remodel, I would ask you, please go out, find a bid, figure out what's going to get you to be able to accomplish that remodel, because I don't want to pull cash out, give you money, and then you don't have anything to do with it. Now you're paying interest on a renovation cost that actually never occurred. Now, once you've gotten that budget figured out and you say, Scotty, I want to pull $30,000 out, then what I'll do a loan analysis and I'll pull up a 30-year scenario, a 20-year, a 15-year, whatever you would like to see. And depending on how long you've been in the house, it might make sense to do a refinance, not on a 30-year, but maybe on a 20-year, because if your rate is coming down significantly enough and you're still getting the money for your renovation, then at that point, now you've not only gotten money out, but maybe you're even saving on your monthly payment, depending on how high your interest rate is. So that is how I sit down and just do my initial loan conversation.
So let me ask you a question. So, because I actually just did a refinance with you, my lender, and this is our second one.
Right.
It went very smoothly. I need another house to do a refinance. But so when we did ours, we went back to a 30-year note, correct?
Correct.
Why didn't we go to a 20-year note?
So during our conversations, the biggest thing is the money that you wanted to pull out versus what your current payment is and what your new payment would be. It made more sense to do the 30-year because of the fact that the interest rates had dropped so low in the current climate that we're in, that the 30-year and the 25 and the 20-year interest rates were all the same. Okay. So it didn't make any difference if you had done a 30-year. The only change on the rate would be if you dropped from a 30-year to a 15-year. So doing a 30-year...
And that makes the rate go up or down?
So if you drop to a 15-year because the term is shorter, the rate actually falls down.
Okay.
But then, of course, your payment jumps up drastically as a result of that. So when I'm doing these analysis, because the market's so low right now, that 30, the 25, and the 20 were all the same. So I always would tell my clients, do a 30-year, and then if you want to pay it off quicker, I can always do an amortization schedule, because ultimately, if you do a 25 or a 30, all it is I'm telling you got to pay this much extra each month for principal, versus if I tell you do a 30, but if you want to pay $200 extra each month, it'll pay it off in 25 or 20. I'd rather let you have that flexibility, because if something happens in life that's unexpected, we want to make sure that our clients have the ability to scale back, because the last thing we want to do is if a car goes out, all of a sudden you can't make that mortgage payment. I'd rather give you the flexibility to control your financials as best you can. So,
So I was reading an article on some reasons why people do the cash out,
mm-hmm.
and one interesting one was a gentleman that wanted to travel to Europe for like a month. He was older,
Wow, that sounds pretty
and he
good.
wanted to take his son, and so he did the cash out in order to be able to take a month off
Yeah.
and enjoy Europe, which is probably pretty expensive. So, what are some other reasons that you've seen people do a cash out refi?
So people, I see people when they come to me and they say, "Hey, I want to do a cash out." It's because maybe they went and got a pool loan from a pool builder and they're wanting to consolidate that all into one payment. And anytime you're consolidating those two, that is a cash out. The other reason we see cash outs are other debt consolidations, being maybe they've got enough equity that it makes sense to pay off all their credit cards, cars, and now they're down to one mortgage.
Mm-hmm.
Another scenario I've seen is where people have multiple houses, and I had a client not that long ago that said, "Hey, I want to pay off my primary residence, so I pulled cash out of my investment property to pay off the remaining balance so that they would have uh, that house paid for free and clear."
That's smart.
And it made more sense because their loan balance was so low, it didn't make sense to pay off that loan because their loan balance was so small, so you couldn't refinance it. But their rate was so high, it just made more sense to do that. And then lastly is the home improvements. Um, and then the last thing I saw here just the other week, I had a client that had kids that were in college and they had a bunch of student debt, and the parents had signed off on the student debt. And he's like, "I want to pull the cash out, pay off all these student loans, and just have it as part of my house payment." And he had enough equity that it actually made financial sense to get those all paid off because he could amortize that on 30 years and have it at a fixed rate for the remaining 30
Right.
years.
So, had a thought and it just left me.
Something.
Oh, okay. If I'm just trying to think of different scenarios, what is a scenario that you would tell somebody is not beneficial to do a cash out refinance?
Um,
Like, when is the next time that I would be up for that? Is it 10 years from your last one?
so first, there is Texas law. So this is just Texas. So if you're watching, you're somewhere else. Sorry, I don't know your laws, but in Texas, you're not allowed to do another cash out for a full 12 months from the date you did your first cash out.
Okay.
So by Texas law, even if you came to me tomorrow and said, "Hey, I want to pull more cash out," you're not legally allowed to per Texas law. So you'd have to wait for full 12 months of payments before you could request that again. But there are instances where people have asked for cash outs where they're talking about consolidating debts. And when I start looking at what those debt payments are from a rate perspective, the rates were so low on them, it didn't make financial sense to go and do a cash out because you still have closing costs, you still have title costs, you still have appraisals in Texas because Texas requires an appraisal on a cash out. But I had a client ask me to do that, and I started looking at all their rates on these credit cards and other little loans, and their interest rate on all of them was like 3.5%. When I broke into what I was going to get their interest rate on their refinance versus the closing costs, yeah, potentially like long term it would have made sense, but I told them, why go through all that when you've already got a good setup, and it just doesn't make financial sense. So I will tell you, I do tell clients all the time, if it doesn't make sense from a refinance perspective, I'm going to tell them don't do it, because I don't want them to go through and pay closing costs to a title company, an appraisal company, to our company, if it's not going to get them further ahead. So, yeah.
Cool.
And then on cash out refinances, like I said, there always is an appraisal required. And if for some reason your property doesn't appraise for as much as you would like, again, you are limited on that 80% loan to value. So if somebody comes to me and says, "I want to pull out 50,000," and it turns out that 30,000 is the max you can pull out, then it's on the clients to decide if it still makes financial sense for them. Because I have had clients that wanted to do cash outs, but unfortunately their property didn't appraise for as much as they thought it was worth. So,
Awesome.
yeah. Now, Something else that I think is important is if somebody's wanting to potentially do a home improvement loan for the intentions of selling their property. Because I know for you on your side, that's something that I think benefits getting a property ready for the market.
Absolutely.
Now, in those instances, if somebody wants to do a short term cash back for the purposes of renovating their home, then at that point, instead of doing a cash out refinance, we actually look at a home improvement loan. And that home improvement loan, of course, the rates are higher, but again, it's something where there's not as much upfront cost for the cash coming to you, and then also you can pay it off early with no issues at all. Because on our side, if you do a cash out, you're required to make 6 months of payments before the loan's paid off. So that's why, like a home improvement loan, you don't have title involved. You can get your cash within about a week and a half. And then again, it's something where they could go in and, based on when you walk through the house and you see potential renovation opportunities to increase their value based on what you see in the market, then at that point I can help educate my clients on, okay, is it a cash out or is it a home improvement loan? And I think that it's very important for clients to see both options, especially if it's a short term need. Now if their renovation projects are more significant, where it's going to take them 12 months before they're ready to sell their house, then at that point it might make more sense to do a cash out refinance, because those project costs are probably going to be very uh, expensive, and a home improvement loan is typically geared towards a lower dollar amount.
Okay. And then, so last week, we talked about credit improvement. Does the cash out refinance hinder credit score?
And when you say
Like,
that,
let's say I refinanced in July of this year and I refinance next July. Not that I'm going to, but I
no,
did. Is that going to continue to drop my credit score because I continue to refinance?
no. So the biggest thing, and I just had this conversation with a client today that I play hockey with. He was asking me questions about, well, what should I do about my credit score? Because he was saying, um, what do I currently have that you can see out there? And I said, the biggest thing that you need to do is make sure to maintain credit cards below 30% usage, and then make sure you're making all your payments on time. And if you do happen to go to the hospital or anything like that, I tell everybody, make sure you're following up with your medical provider, because I see a very high percentage. I don't know what it would be, 70%, 60%, but it's a very high percentage of people that always have medical collections that show up. And it could be as small as $100, and it can tank somebody's score from 740 and pull it down to 680 just because of
Yeah, that
$100.
actually happened to my husband before
Yeah.
we were married, and he got a bill he didn't even know was out there, and it was into collections.
Yep.
And so when we got married, I am in charge of all the bills
So,
because that really hurt his credit. It took
yeah.
him, I bet it took him 5 years.
Yeah. Oh, and that's the bad thing is, so I will say, make sure you're following up on those things. And if you're not, I tell everybody, pull your annual credit report. It's free. You can see exactly what's showing up on Experian, TransUnion, and Equifax. It doesn't cost you money, and you're legally allowed to pull it once every 12 months. And I tell people, do that, because you'd be surprised how many things can pop up on your credit that you're not aware of.
And what website do you tell people to go to
It's
do that?
annualcreditreport.com. And
Okay.
so if you go to a website and it starts asking for you to pay for it, then stop right there and exit that website, because
And
it's
give
not something.
Scotty a call and he will walk you through it.
Exactly. So, if you guys are thinking about refinancing for the purposes of getting cash out to consolidate debt, or maybe consolidate debt and get a lower rate, or doing some sort of improvements around the house, these are things that we need to be talking to you about, especially if there's opportunity for you to increase your value in your property for a resale standpoint. Because people, when they walk in, majority of people want to see a house that's turnkey, where they can walk in and not have to come in and tear things out. So if you've got a house that's original and it was built in the 70s, this is a good opportunity for them to fix those items and bring it up to 2020 standards
Yep.
that people expect.
Absolutely.
So,
Well, let's wrap this up.
yeah. So we do want to.
We can talk credit all night, but
but we do want to make sure y'all are liking and subscribing our channel, and then Jody.
And follow us on Instagram.
Yep.
And this is a newly created site, so I have to look it up, but it's home_alone972, and we post funny bloopers.
Yep.
So follow us, and we appreciate y'all. And we'll post our contact information at the end. So if we can help in any way, even if you don't live in Texas,
Yep.
feel free to call us, because we can refer you to a good agent in your area. So
Yep. Thanks again, guys.
Bye.